All right, thank you for joining us for this month's August monthly market outlook from blockchain.com. We've entitled this month's presentation, A Final Crypto Adoption Frontier. My name is Nicholas Carey. I'm the co-founder of blockchain.com, and I'm here to welcome you today. I was also the co-founder of the Blockchain Commission for Sustainable Development and the author of The Future is Decentralized. We have some very special guests for you today, including Peter Mauric from Parity, who's very deeply involved in the Polkadot project. I'm looking forward to our discussion with him, as well as Dr. Garrett Kalman, who I'll be introducing in just a little bit. So quick update on blockchain.com about us. We're the world's most popular way to buy, sell, and trade cryptocurrencies. We've been around since 2011. We've raised over $500 million for the company, but more importantly, we've helped users all over the world transact almost $1 trillion worth of value on chain using the blockchain.com wallet and blockchain.com platform. So let me talk a little bit about that platform. We're most predominantly known for that wallet. You can download it on Android, iOS, or create a web wallet online. This is the world's most popular cryptocurrency wallet, hosts a variety of different assets. It's a great way to get started with your crypto experience. Or if you're an old user, we also have a bunch of new features for you to test out, including the blockchain.com exchange, where you can buy and sell and trade like a professional trader. The blockchain.com Explorer is still a very popular venue to get on-chain analytics and information about what's happening on the crypto networks. We offer a custody product for cryptocurrency protocols, as well as institutions, a feature to make it easy to buy and sell, interest features as well, so you can deposit your crypto at blockchain.com and even earn interest on that. And then finally, an API is available for all of the engineers and computer scientists out there that want to build their own things on top of the blockchain.com platform. So a quick reminder, the team has been extraordinarily busy over the past 30 days. Crypto doesn't sleep. In case you missed it, we finally shipped SegWit for the blockchain.com wallet, which has reduced on-chain congestion for specifically Bitcoin transactions, as well as saving customers fees. Really excited about that. We've also launched a lot of new assets. We have a very distinctive listing practice for that and very careful about what we put in the platform. But this month, we're very proud to add USDC, Uni, DAI, Comp, Link, and STX, which are now all available on the blockchain.com exchange with some of the best pricing for those assets available. We've also launched instant USD, Euro, and Great British Pound transfers between the exchange and the wallet. We've got a faster, simple swap experience. You can trade between assets more quickly and more reliably than ever before. We've also added 2 new assets to the interest account feature at blockchain.com. So if you hold any Aave or Wi-Fi, you can actually earn some yield on that by depositing it with the blockchain.com wallet. A couple other things, the interest feature has been launched on Android. We've improved the trade checkout flow on the exchange, and we've enabled a neat new feature called Unstoppable Domains, making it a bit easier for people to send and receive crypto. So lots going on the platform. If you haven't seen it, we've updated the website, made it a little bit easier to get into, and hopefully make it a gateway for the next generation of adopters. We'll be talking a little bit about what that tipping point looks like today, as we're seeing kind of a surge of interest and activity this year in general. These are the published rates and minimum transfer amounts if you're interested in earning some yield or interest on any holdings you have in crypto. So if you want your crypto to work for you while you sleep, you can deposit and earn some interest back on those. These are some of the best rates and certainly ones you would get higher than you were if you deposit those things into a traditional financial service like your bank. So a great way to earn some extra income. Finally, the blockchain.com exchange has seen a lot of new features developed. We've got some very exciting new features that we'll be launching in the next couple of weeks, but we'll have to summarize those for you at the next market outlook. But stay tuned. Lots of things have been asked for there, including new assets are launching on a weekly basis today. So last time we spoke, we covered the market outlook, on-chain insights, where we look at everything that's happened on the Bitcoin blockchain over the previous 30 days and give some visibility into what's happening. And then we hosted 2 special guests, UK founders of cryptocurrency companies, including Tom Robinson, chief scientist and co-founder of Elliptic, which is an analytics company and compliance firm for cryptocurrency companies. And then Itamar de Suisse, the co-founder and CEO of Argent, who's built a pretty innovative Ethereum wallet as well. So if you want to look that up, you can find it on YouTube, scroll through the Facebook fan page, or also look it up on Spotify. So without further ado, today's focus, we will cover on-chain analytics and a market outlook with Dr. Garrett Kalman and our special guest today, Peter, Head of Public Affairs at Parity. Very excited about hosting Peter. We'll get through our section quickly with the on-chain analytics so we can get to a robust conversation about what's going on in the Polkadot community and hear more about what that community is focused on. So thank you very much. Without further ado, I'd like to introduce Dr. Garrick Heilman. Dr. Garrick Heilman and I have been colleagues for a long time. He heads the research department here at blockchain.com and is one of the most cited cryptocurrency and blockchain technology researchers and economists in the world. He created and taught the first UK class on blockchain technology at the University of Cambridge and has authored leading research on cryptocurrencies, markets, stable coins, and much more. He was ranked as one of the 100 most influential economists in the world and is regularly asked to share his perspective with the FT, Wall Street Journal, Bloomberg, and many more. So thanks to having Garrick today. Welcome.
Thanks, Nick, for the kind introduction. So as Nick mentioned, we're going to move through our outlook and on-chain insights pretty quickly so we can get to the conversation with Peter and talk about Polkadot. But July was a constructive month for crypto assets. We saw Bitcoin have its first positive month closed since March. Up 20%. Ethereum was up a strong 15% as well. Most asset market, traditional markets showed some positive growth, with the dollar kind of softening a bit. But it was overall pretty strong month across the board for crypto. And as we talked about last month, it's really important that after this big kind of run up at the start of the year in spring, that we see kind of a stabilization and a kind of a new foundation. Especially for new entrants into the space who may have watched what happened and felt like they'd kind of missed the boat. Where's there a floor stability? That $30,000 to $40,000 Bitcoin price level so far is holding up pretty well, and I think that's going to help build confidence for kind of new entrants, especially to start allocating into this asset class. For years, people have always asked, why are crypto prices going up or down? Bitcoin's price and crypto prices, any price, is ultimately driven by supply and demand. And one thing we can look at, which Glassnode's published, is with regards to Bitcoin, we're seeing a share of coins return to longer term holders back to kind of levels we saw earlier this year. So that's very, very strong, a strong indicator that supply is tightening up. And as demand increases, we should see upward increases in prices. So this is something we watch very closely, is the supply side. Are coins going into longer term holders, moving off exchange? The data produced by Glassnodes and others is suggesting that's the case. And that's, I think, very positive and constructive for the outlook over the coming months. Just briefly on-chain activity, we saw a decline in some things that are positive in some ways. Transaction fees dropping by a third, from $6 per transaction on average in June for Bitcoin down to $4. That's of course positive if you're using the network. It means less revenue for miners. On-chain activity mostly decreased in terms of number of transactions and payments. So that's the fundamentals is something we also watch closely, and we'd like to see more fundamental growth of activity on chain, of course, to drive demand higher and prices higher. The other thing that's been really in focus is regulation, and we have in the written monthly outlook, which we'll publish on our blog here shortly, a review of some of the key regulatory topics that are kind of hanging over this space. There's been a lot of discussion of the current infrastructure bill in the U.S. and how that may apply to miners and even software developers. But the three things that we focus on in our written write-up on the regulatory landscape are, non-U.S. crypto exchanges are certainly being targeted by regulators around the world. And they're looking at things like extremely high leverage, 100x leverage, and these kind of stock equity tokens. Those have been delisted, and we're seeing leverage kind of come down. Stablecoins are also another huge area of focus. The SEC chairman, who I think is making comments today, has talked about how some of these stablecoins might actually be considered securities. And then DeFi is another area, particularly things like derivatives, which are typically very tightly regulated. And so all of these are kind of areas to keep an eye on. They're going to, regulation is going to continue to be a factor in kind of, the evolution of crypto markets. We've always talked about how as crypto assets became bigger and more important, regulation was bound to increase, and it's just part of the game. So keep an eye on this. In general, I think regulators are trying to be smart and balance the desire to promote innovation, economic growth, with the need to kind of safeguard, the financial system and police against bad activity, but certainly a big factor. So last thing I just wanted to cover before we get to our conversation with Peter, which ties into the title of this month's webinar, the final crypto adoption frontier, is this idea that of the four major kind of investor categories in crypto assets, we've really seen meaningful adoption from three so far, but not the fourth. We've of course seen retail, smaller investors who've been there from the beginning, support the crypto asset space. We think over 100 million people maybe today actually own crypto assets. We've seen Wall Street, especially in the last 12 to 18 months, arrive, legendary investors like Stanley Druckenmiller and Paul Tudor Jones, more hedge funds, et cetera, getting involved in the space, and even corporates. Something that was very positive this last month was Elon Musk revealing that SpaceX, another corporate, actually holds some Bitcoin on their balance sheet, and Square, Tesla, and others have continued to in the last 12 months increasingly adopt crypto as a treasury reserve asset. But the fourth pillar or leg of the chair, so to speak, that's yet to arrive is sovereigns, and this is governments. It could be sovereign wealth funds. It could be even central banks. It could also be local governments. We've heard talk this year of cities like Miami actually adopting crypto and Bitcoin specifically as a treasury reserve asset, but we haven't seen a ton of action there yet. I think the Singaporean Wealth Fund has done some things, investing in companies like Anchorage, possibly using their product to invest in crypto assets. But this is an area that really has yet to take off, and it's a very important one. And I just want to show some really simple statistics on kind of how big this can be, looking at both the sovereign wealth funds and the central banks and their reserves. Many of these sovereign wealth funds and central banks own a huge quantity of gold. And as many investors on Wall Street and elsewhere have looked at Bitcoin specifically as a hedge or an alternative to gold, scarcer, easier to store, transport, divide, et cetera, certainly we think sovereign wealth funds as well and central banks might start to do the same thing in the coming months and years. And just a small allocation from these massive sovereign wealth funds, some of which have assets totaling over $1 trillion like Norway, could be a big boost to inflows into the crypto asset space. 1% allocation amongst a select group of sovereign wealth funds would be $24 billion. That's 6 times the flow of funds we saw this last month in crypto. On the central bank side, it gets even bigger, and we're not even looking at the biggest central banks like the European Central Bank and the Federal Reserve, which we would expect to maybe be a little slower to think about allocating, but developing markets that are concerned about a deterioration in the value of the US dollar. 1% central bank allocation would be a $50 billion allocation. And there's groups that are starting to work on this issue of sovereign crypto adoption. It's an exciting space to watch. I've written about this. I published an article on CoinDesk at the end of last year describing this phenomenon. So keep an eye on sovereign adoption. We think it could be a big driver in the months and years to come. All right. So now, without any further ado, we turn to our chat with Peter Mauric from Parity and Polkadot. Peter, welcome to the podcast.
Thank you so much for having me.
Great to have you, Peter. So we've got a little tradition around here, and then I'm going to hand this off to Garrick, but we always like to ask everyone how they earn their first buck as a little icebreaker. So
Sure.
When you were a young adult, what's your story? How did you earn your first dollar, peso, shekel, whatever?
So my father actually was my first employer, as many people can probably commiserate with. He is still a sort of a systems engineer in the energy industry. So I was actually climbing around the emergency generator systems in really large data centers when I was in my teens, crawling through crawl spaces, connecting wires with his crew, which was actually kind of interesting. Come full circle, like I was inside of the buildings that house Web 2 and a lot of the payment processing, and now I'm here working on Web 3.
Great.
I
Well,
love that.
Peter, it'd be great to hear a bit more about yourself. And it's always nice to hear how people got involved first with the crypto space and your background prior to that.
Sure. So after I got out of the crawl spaces at these data centers, went to college, obviously, got a degree in political science and economics, and entered politics here in New York. As you can see, I'm coming to you from New York City today. Worked in a lot of like early stage city council races, sort of lower level offices in New York City, and then eventually got recruited by a public affairs strategy consulting firm based out of Chicago that David Axelrod had started after he left the Obama administration, where I did a lot of work sort of at the intersection of politics, the public, and public policy, and then the private sector, excuse me, doing all sorts of stuff. So again, still working on energy infrastructure, but at a much higher level, like permitting and regulation. Did a lot of sort of more general corporate comms, and beyond that, other sort of lobbying or public affairs activities in primarily New York City and state, but a bit nationally as well. Then sort of 5 or 6 years into that job, crypto and blockchain started to become a thing. And I was the guy in the firm that knew just enough to be dangerous, to be the one where everyone came and said, I got a potential client. What can you tell me about this Bitcoin thing? Ethereum was just getting launched at the time. So became the subject matter expert. Anyone who is interested in getting into the industry, definitely recommend become the subject matter expert in whatever company you're in. And then from there, met Jutta and Gav through a VC here in New York, who I was working with, who was involved both in early ETH days and Polkadot early on, and figured if I was going to make a jump into crypto full time, there wasn't really anywhere better I could land than Parity.
Good choice. Yeah, definitely. So that's interesting about your political background. I just want to mention we actually had Ben Rhodes on our podcast last week, and it was great to talk with him about the political landscape.
Awesome.
Yeah, and his view on crypto, and he's I think got a pretty open mind on it.
Yeah,
it's a newer topic for him, but he's looking at it in the same way as we discussed, as the internet is something that is got all this kind of potential and supports a lot of U.S. values around like openness, transparency, and so on. So that was very encouraging to hear.
I didn't realize you had him on. I'll have to give it a listen. I'm a huge Pod Save America and World fan, so I'll definitely give it a listen.
Yeah. And his new book is a great read. He's a wonderful writer. But let's turn to Polkadot and which is the main subject. Gavin Wood has described Polkadot as kind of the biggest bet against chain maximalism, and I think some people, especially who are new to crypto, will come in and see all these kind of tribal arguments going on sometimes between different blockchain camps. Can you talk about that vision and kind of what Gavin means when he talks about this is about not maximalism but something bigger than that?
Yeah, absolutely. So I think broadly speaking, the era of these sort of linear mono-chain, either cryptocurrency networks like Bitcoin or smart contract networks like, say, Ethereum or Tezos or Solana, where it's really just a single state running in a single direction, sort of hoping to encapsulate an ecosystem in and of itself. We're getting past that sort of initial phase of this blockchain or Web3 ecosystem to the point where we realize that this is a very powerful technology, but generalization is not going to lead to the outcomes that we want to achieve. So this was where Gav, who had originally been the one who originally came up with this concept of Web 3.0 while he was building Ethereum back in 2015, this idea that these blockchain networks could provide a trustless base layer to build a new internet that is not reliant on Google and Facebook. It really comes down to the point where you need both connectivity across an ecosystem, but also a high level of customizability at the layer one, like the blockchain level. So this naturally brings you to the conclusion that we're going to need many blockchains doing many specific things, all communicating, running in parallel, and working together to form this Web 3.0. So this was when, in then 2015, 2016, Gav and Vitalik were trying to sort out what Ethereum 2.0 was going to look like. And Vitalik had this sort of hard set vision that we would just shard the Ethereum state and split up one general smart contract state across many different smaller shards in order to massively increase the throughput of the entire system, which would hopefully allow people to build sort of whatever they wanted to. Gav, at the same time, had written a blog post for the Ethereum blog called Chain Fibers Redux, I believe it was called, if people want to look it up, which described a sharded blockchain protocol, but where all the individual shards were actually their own layer 1 blockchains that you could code, customize to a specific use case, whether it's infrastructure like DeFi or a general purpose smart contract platform like Solana or Cardano, or something that's very specific to NFTs. You could have a customized, optimized, efficient layer 1 protocol connected to what we're now calling a layer 0 protocol with Polkadot, which just provides this connectivity and security and allows all these other customized layer 1s to do what they need to do best, whether it's some core piece of infrastructure or some specific like application.
Mm-hmm. That's great. And just a warning to listeners, there's going to be some probably new vocabulary and terminology here for folks.
Feel free to interject. I can define as we go.
Yeah, no, we're going to try to keep this relatively high level. But
yeah, this is always a disclaimer I give at the top is Polkadot is probably 2 to 5x more complicated than the next most complicated protocol. So we'll help everyone along as much as possible.
Yeah. So I think it's worth kind of spending some time on some of the things you mentioned there, and kind of this there was terms thrown out like sharding, and we don't have to get too deep into the weeds on some of these things, but the basic I think idea here is, if I can summarize, is you want to provide more flexibility to software developers to customize blockchains, but have kind of interoperability, so their chain can communicate easily with other chains, and have that kind of added transferability, liquidity, kind of composability, and so on, that comes with that interoperability. I don't know if that's
and then crucially also providing secure economic security for those chains that are connected to Polkadot. One of the biggest barriers to entry for if we're looking at a anti-chain maximalist future, we're looking at a future where people need to be able to launch a new blockchain for a specific use. One of the biggest barriers to entry for people to actually use that blockchain is economic security. So when you launch a new project, no one knows about it. It's connected to a token that needs to secure it, that no one's ever heard of and doesn't attribute any value to. Your blockchain market cap could be worth, in the tens of millions of dollars, in which case it would only cost someone, $3 to $10 million to attack it. If you're deriving your security from a protocol like Polkadot, which has multi-billion dollars of economic value locked into the system, it becomes basically impossible for anyone to attack your chain, meaning users are actually going to be more willing to use that chain because they trust its security.
Yeah. And if I go back to 2015, 2016, when it sounds like the foundations were being laid for all this, I mean, that was a time when many corporates we're starting to think about distributed ledger technology and doing something that's maybe more permissioned and more limited. And a lot of those, as we know, initiatives did not take off, in part for the reasons you mentioned. There was, a lack of, technical infrastructure and security, maybe a lack of developers, who would work on something custom and specific to a corporate, even a large corporate. And I wonder if you could talk about that whole kind of evolution and how Polkadot kind of fits into and maybe really attractive to, a corporate or a traditional government institution, for example, that is looking to customize or do something a little more unique, but also plug into this bigger thing.
Yeah. So, I mean, we can use the example of let's imagine the United States the Fed issues a central bank digital currency. Building that in an ecosystem like Ethereum or Solana or Tezos is going to be difficult because you don't actually own the core infrastructure that you're building on. With Polkadot, the Fed could own its own layer 1 blockchain protocol and own the governance of that protocol, right? So this is also a key thing that we learned developing Ethereum, that we really internalized and have deployed on Polkadot, is really, really robust and functional on-chain governance that allows developers, teams, projects, companies to govern their network as they see fit while still connecting to, as you said, a broader ecosystem of protocols like Ethereum, like Bitcoin, and like these other chains connected to Polkadot. But on their network, where they are the ones controlling basically their settlement layer, they can decide what happens on the network, and that governance includes the ability to claw back funds, KYC everyone if necessary for something like a CBDC, and then also be able to meter who's coming in and out of that network while it's still connected to a public network of blockchains through Polkadot. So it really does completely blur the lines between what a sort of private consortium chain looked like before and a public network, and really allows those institutions, corporates, or even more sort of startup projects to determine the governance that's necessary for them to accomplish their goals, but still have full connectivity and interoperability with all the other cool products out there in crypto today.
Yep. Yeah, and so to make this to kind of continue with that that point, we had on the podcast and webinar the Engine team a few months back, and they chose Polkadot for their new Efinity initiative. Engine is doing some pioneering work on NFTs and gaming, and I think certainly some of the reasons they chose Polkadot were just transaction volumes and having a network that could accommodate cost effectively very high transaction volumes, that compatibility, that interoperability. But maybe you could speak to from a crypto gaming perspective, why Polkadot may make particular sense for platforms like Engine and others.
Yeah, absolutely. So with Engine's obviously a very early and innovative team. They were one of the earlier teams building NFT standards on Ethereum, and have now, like you said, chosen Polkadot to build their sort of production grade hub for their broader NFT activity. And I think so. If one, the cross-chain chain compatibility that you mentioned is huge. If you're looking at a really strong team that's established itself, almost all of them realize that the future is multi-chain. And if you want to be future-proofed in a way, and also be able to access whether it's liquidity in DeFi or users in games, you really want to have a hub on Polkadot so that you're able to sort of coordinate all of that activity through a chain that can be customized for that use case, right? So if you're building a crypto gaming application on a general purpose smart contract environment like Solana, you're going to run into regular fees and costs no matter what level of scalability you have. And if that network becomes very popular, that congestion is going to happen regardless, and fees will go up no matter what. Obviously, we see this a lot on Ethereum. When you're able to build a protocol just for NFTs, it doesn't need smart contracts. We're actually talking about programming what we call the runtime, the central state machine, the logic of a blockchain itself, which allows you to optimize for NFT transfers for gaming rather than for gas metering in a smart contract environment. So that it's going to cost your end users way less. Your games are going to run a lot more seamlessly. And it also allows teams like Engine to like abstract the blockchain away, because long-term, right, most people aren't going to know or care that there's a blockchain under their game. They just know that it works and that it's fun and that it's valuable to them. And in order to do that, you need to be able to customize your own layer one. Like we started talking about it at the top. It's not really possible in a general purpose smart contract environment. And teams like Engine are realizing that and deploying on Polkadot for that reason.
Following up on that, we're big fans of the Engine project. What are some other examples of how Polkadot's being used? Like, can you maybe rifle off, 1, 2, and 3 top projects or ideas by engagement, just to give a sense to the community listening today, like how is it being used?
Yeah, absolutely. So we have seen the first 5 parachains. So these parallel chains connected to Polkadot, all customized layer ones that have their own communities, their own networks, and their own layers of applications on top. So I can sort of talk about the first, 3 parachains that won their auctions on Kusama, so that we don't have to go into the weeds on the process of acquiring a parachain slot. But it's somewhere between like a reverse ICO with yield farming attached and investor protections. We can probably do an entire other episode on what that process actually is. But the first parachain that launched on Kusama, so this sister or cousin network to Polkadot that we launch on first to test out and prove out the technology before deploying on Polkadot. The first three that have launched is Karura, which is the Kusama version of Akala, so this DeFi optimized parachain, probably one of the highest profile teams in the Polkadot ecosystem. They're building a layer one parachain that has all of the low-level DeFi primitives built into that runtime so that it massively reduces the cost gas overhead and massively increases the throughput and efficiencies for a layer of DeFi applications built on top. So they have a stable coin built into the runtime of the blockchain. They have a DEX like Uniswap built into the runtime of the blockchain. They have a liquidity, staking liquidity protocol built in to the runtime of the blockchain. So a lot of these projects you see as like apps on top of Ethereum are actually getting taken down a level in the tech stack. And for people who are familiar with the way Ethereum works, it's like being able to like choose your own, write your own opcodes, and then allow smart contracts on top to call that base layer functionality in the network, meaning that there is, like I said, much greater throughput and much greater efficiencies for all the applications built on top, right? So that's like Polkadot native DeFi in its own blockchain. Was the first one to launch on Kusama. The second sort of major one that I would touch on is a project called, or a parachain called Moonbeam. Their parachain on Kusama is called Moon River. And this is basically the most EVM compatible layer one blockchain in the ecosystem that's not Ethereum, obviously. This is a benefit of having the core team that actually built Ethereum on our team. They've built these primitive Ethereum primitives into Substrate, this blockchain building framework we've developed for building blockchains. They've built that all in, and then the Moonbeam team has really taken it and run and developed a really comprehensive suite of Ethereum compatibility tools. You can access it using MetaMask, and developers who are developing Solidity smart contracts can basically copy and paste their existing Solidity code into Moonbeam and run it on Polkadot. So we're seeing a lot of Ethereum sort of DeFi blue chips and a lot of other of that sort of core low-level infrastructure who know that they need a multi-chain strategy. It's quite an easy decision for them actually to deploy on Moonbeam, knowing that there's going to be a trustless Ethereum bridge on Polkadot, and that it's going to sort of, again, future-proof their application without them having to do too much extra work. So this is sort of like, people are familiar with Ethereum 1 and this plan to merge ETH1 into ETH2. That's basically already done on Polkadot. And Moonbeam could also potentially be looked at as like a Cardano competitor. It's basically a very similar smart contracts, proof of stake smart contract layer with some amount of governance. Although I'd say I think Moonbeam's governance is a lot closer to Polkadot, which I prefer to Cardano's model. And then and actually another one that so he's other than Affinity, and so then the last 2 and 3 parachains that have won their auctions on Kusama. One is Kala. So Kala is the Kusama version of Fala network, which has recently been rebranded to Aster. So again, lots of things. I will put a little tweet thread together with all the links to these different projects after this. But that's basically a parachain, so the layer 1 blockchain that is being customized to make it as easy as possible for people to build and launch dApps, right? So a core infrastructure for applications, to sort of plug and play, like application layer development, team out of Japan, which we're really excited about. And then some of the other ones that have launched more recently are also focused on adding a privacy layer, right? So having an entire layer 1 blockchain in the ecosystem that other parachains can leverage to add privacy to different parts of their infrastructure is going to be important long term, and also another one that I'm really excited about.
Cool. So I want to come back to something you mentioned earlier, which is security. And we've talked a lot about how in the blockchain world, I mean, this is the fundamental kind of issue. We would not be here unless these protocols were secure. That's the bedrock on which this whole space kind of exists. And I wondered if you could kind of explain in more detail, how Polkadot solves security and its security properties relative to other blockchains and systems, why it is secure, and what security is going to look like, for Polkadot in the months and years to come.
Yeah, so Polkadot is a proof of stake protocol. So it's reliant on the users staking their assets in the system to secure the protocol versus proof of work, which basically many people know, relies on proving you used a certain amount of energy to solve a math problem to secure the network. So as a proof of stake network, a significant amount of the total DOT in the network is locked in staking. So the sort of optimal rate, once we have all of the technology up, right? So once all the parachains are live on Polkadot, and I can get to how parachains actually add to the security of Polkadot, the optimal rate for staking, I think, is going to be somewhere between 50 and 60% of all DOT supply. So proof of stake system locks up a lot of the DOT. Obviously, we've been very, very careful throughout the years as different token distributions happened to ensure that no single entity or group of people really have outsized amounts of DOT. A lot of people early on came and wanted huge amounts, and we've basically said no, because this is incredibly important for a proof of stake protocol, and a number of protocols, including Ethereum and others who have already launched, have token distributions that I would honestly call into question, because so many sort of insiders and a small group of VCs own 30, 40, 50, 60% of the network, which is going to have to change if they're going to be around long term. So one, ensuring that the token is well distributed, and then that way we can actually rely on a proof of stake system to be fair and honest long term. And then the other piece of the puzzle is parachains, right? So these layer one blockchains that are deriving their security from Polkadot also provide, in order to access the security of Polkadot, provide a DOT bond to secure a slot, right? So there's a lot of ways for different teams to acquire the necessary DOT to get a slot. But one of the ones we're really interested in talking about, and I mentioned earlier, is this crowd loan process, where you as a DOT holder are able to basically loan a parachain team, parachain community, some of your DOT for 1 year or 2 years, that they basically borrow from you in order to secure this slot on Polkadot, and then return to you after that slot period is done. Many teams will choose to use that also as a decentralized token distribution method, community building effort, because it really does give a clear and fair opportunity to distribute tokens to the existing Polkadot community and beyond. And this is also going to lock up a substantial amount of the DOT in the ecosystem. So if we're looking at around 50% of DOT being locked in staking, somewhere between 20 and 30% of the remaining 50%, or so I'd say 20 to 30% of the overall 100%, a little more than half of the remaining half will be locked in parachains. So long term, and currently, but also long term, the total amount of outstanding DOT that any individual could acquire to try to corrupt a proof of stake system will never be large enough for them to be able to attack it. And then, because these parachains derive their security through that bond from the Polkadot relay chain, this layer 0, as we call it, they basically have the same security as the whole network. So as you mentioned, and it was even worse in 2016, 2017. So a lot of these new chains were launching at $10 million, $100 million valuations and getting attacked left and right. You really need a substantial economic barrier to people attacking your network, and Polkadot provides that.
Yeah, I was going to say, Polkadot, correct me if I'm wrong, I think today has a market value of roughly about 19, 20 billion total market value. Is that it's top 10? It's a top 10 crypto asset in terms of market value.
Yep.
Is that, yeah. And in terms of the size of the market value relative to the distribution of the tokens and preventing kind of attacks and enhancing security, both are I think important, but can you speak to kind of how you think about that? And as always with any kind of privately owned network or private property, there's the chance that over time someone acquires, of course, a bigger stake of something. How do you think about that issue with regards to proof of stake and Polkadot specifically?
Yeah. So if you want to talk about like worst case scenarios in the case where someone would actually be able to acquire that amount of DOT to corrupt a validator set and manipulate transactions, this is where a couple things come into play. One, it'd be very difficult for them to get to the 33 or so percent they would need to actually manipulate the validator set. But if that were to happen, there's still a majority of DOT holders in the ecosystem who hold more DOT than them, which is why we have really robust on-chain governance to solve those problems, right? So our team built Ethereum and was in the midst of the DAO hack and saw something catastrophic to this level happen, and learned a lot from that. And learned that while a lot of people disagree, being able to fork to fix the problem was an effective solution. And while the decision making to get there wasn't ideal, that is potentially the outcome you would want. So how do you give legitimacy to that decision without having some auditable on-chain process for fixing bugs or attacks when they happen? And this is where the on-chain governance system that we've developed for Polkadot really comes into play. And it's unique in the crypto ecosystem in that stakeholders vote. There's all sorts of mechanisms built in that allow smaller stakeholders to lock up tokens for greater conviction. There's liquid democracy protocols built in where you can proxy your vote to people. So there's a lot of complexity there as well. Again, I would say substantially more complex than the next most complex protocol, but that's because we've been in the weeds on more of these both development scenarios and sort of crisis scenarios than anyone else in the ecosystem. And we're hoping for the best, planning for the worst, and know we need these tools to fix those problems when they come up. So Polkadot is also the only protocol in the ecosystem that actually pushes upgrades to validators on chain. So it's not up to the validators to accept the upgrade. It is in the runtime of the blockchain once stakeholders vote on it. So if someone did come in to corrupt the validator set, if they were to acquire enough DOT to do that, we would just issue an on-chain vote to remove them from the validator set and swap in the next closest validators, and the network would be fine. Worst case scenario where something did happen that was catastrophic, a fork is still a viable option to solve that. But again, we've got, I think, multiple layers of redundancy before we get to that level.
A question that's kind of coming from someone watching today, a little bit different, but kind of in the tokenomics department. So in Bitcoin land, people can download the core client and start to mine on their computer or with a rig, or maybe with something more sophisticated. If you don't want to buy DOT on an exchange, what is the best way for people to support the network?
If you don't want to buy DOT on an exchange, the best way to support the network. So if you are if you are somewhat technical and wanting to get in the weeds on securing the network, you can set up and run a validator and lobby the community for nominations. So Polkadot runs on a nominated proof of stake system. So if you were able to set up a robust system for running a validator, you could absolutely set up a validator and get nominations from the community to get into the active set. Beyond that, I think that there's a huge amount of work to be done for all of these layer one parachain communities. They all have ambassador programs. They're all hiring constantly. So if you really wanted to get involved, they'd be more than happy to talk to you about getting involved at that level. But again, the DOT is crucial to most of the actual on-chain operations, whether that's staking or governance or interacting with parachains. So if people want to actually play with it, I think that's probably something that they would need to explore.
Great recommendations. Thanks.
So Polkadot often gets compared to Cosmos, and I think it's worth just spending a little bit of time kind of talking about the differences between Polkadot and Cosmos. And you, I think, touched on a really important subject earlier too, around Polkadot being able to make it easy for Ethereum developers to port dApps and whatnot over to Polkadot. And so if you could touch on some of that as well, like what friction is there in place for Polkadot versus Cosmos, or how are you making it easier? Because I think this is a key question right around blockchain network development is how do you attract a robust developer network, make it easy for developers to come and build. That's a huge, I think, part of what's going to make these networks successful.
Yeah. So I think the best way to think of this comparison, first of all, I get this a lot, and in general, I say they're not really comparable. The best way to think about Cosmos is sort of like Ethereum 1 today, but proof of stake, and like Ethereum 1 with something like Polygon, right? So like it's side chains, a system of side chains running alongside a Tendermint main chain, but the engagement and interaction with the main chain isn't really clear. And it's not really clear what the value is for the actual Cosmos hub chain. Many Cosmos chains run and are successful without really any interaction, right? So it's again like halfway there, but also not necessarily giving the tools and incentives for a real multi-chain ecosystem. Most of the chains you see in Cosmos are running their own sort of ecosystem, still siloed from the rest. When you introduce sharding, which is again a completely different sort of scalability model than a sidechain model, you get this security built into the network overall. And when the security is built into the network overall, you also have better connectivity guarantees across the entire network. So this is part of the reason why we're able to ship Polkadot with interop from day one. Cosmos launched its hub a few years ago and only just launched the initial MVP of IBC very recently. And the incentive alignment within Polkadot is for these chains to work together to build a better whole rather than build sort of their own little ecosystem on the side.
Great, that's helpful. And yeah,
on the friction,
I'll toot your horn a little bit. Polkadot seems to be doing a little better in the marketplace, certainly in terms of ranking over Cosmos. So the market is certainly speaking in your favor in that comparison right now.
Yeah, the other thing I think you said was like in terms of friction for Ethereum developers. I think that's also a big part of it, right? So in Polkadot, there's also more sort of levels of developer, right? So there's these core developers that build the core protocol and Substrate, this blockchain building framework. And then there are Substrate parachain developers that are building layer 1 protocols, and then also application layer developers on top of that. So it's also, I think, more it's a more cohesive sort of step up in terms of development level that developers can see a lot more easily. And then when you present an Ethereum developer with a product like Moonbeam, which allows them to very easily write their application in Solidity, it becomes very easy for them to see the value in that when there's also really clear security guarantees and interoperability guarantees between all these other networks, right? Cosmos, if you launch a new Cosmos zone, I think they're called, like the side chains, you have the same security issues we talked about earlier, right? You need to get validators on board and you need to start building your economic security before people trust to build on it, which is definitely a big hindrance for people coming and building there.
Yep. Just ecosystem wise, just worth mentioning, there's a few different entities that are involved in the Polkadot ecosystem. You're at Parity. There's the Web3 Foundation. Can you talk about some of these different entities and what their roles are, and and how that's going to evolve in the years to come?
Yeah, absolutely. So Parity Technologies was founded in 2015, 2016 as Gav, and his core C++ team was leaving the Ethereum Foundation, founded to continue building out Ethereum to some extent, tooling, and broadly the Web3 ecosystem. So the first major product of Parity Technologies was the Parity Ethereum client, which at the peak of its use, I think in like 2018-ish, something like 85% of the network was running on. And then at that point, obviously, we started to shift focus more and more to Polkadot, and have since passed the Parity Ethereum client to the community, and is being maintained by others in the Ethereum ecosystem. It's now called the Open Ethereum client. Web3 Foundation was founded a little bit later than Parity, after Gav wrote the Polkadot paper based on that blog post I mentioned earlier called Chain Fibers Redux, and launched the Polkadot project. The Web3 Foundation was founded to steward Web3 technologies broadly, focusing on research and then also helping manage the funding of these protocols, starting with Polkadot. So Web3 Foundation was the, I guess, issuer of the DOT token, and was the one who ran the initial token distributions, and long-term will be focused more on research, but is going to has committed to reducing its DOT stake substantially, and is, I think, now in the low double digits to single digits of DOT holding, which we're really excited about, considering also some of the proof of stake chains that could be considered competitors and what their sort of central entity holdings are. I think that could be a long-term sort of issue for those other ecosystems. So long-term, the Web3 Foundation will be focused on, like, the research team is focused there, supporting all sorts of other sort of Web3, not necessarily specific to Polkadot technologies. And then Parity will always continue to be like a regular old dev shop.
Nice.
Cool.
I got one more question, and then actually a question for both of you. So you're not getting away, Garrick. So speaking of that roadmap, actually for the next 6 months, what can the Polkadot community look forward to coming online?
Yeah, so we just wrapped up a week or two ago the first 5 parachain launches on Kusama, this canary network, where we stage things. Basically, it's a real network. It has real value, just less. So when if things go catastrophically wrong, they're not as painful. The motto of Kusama is expect chaos and no promises. So we're sort of going through an assessment of those first 5 parachains going live. The dev team is actually currently in Berlin making some optimizations to lead up to the launch of parachains on Polkadot, which is the big thing everyone's been waiting for. So I would expect that we are going to be able to look at a Polkadot parachain launch process pretty soon here. And that's going to be, I think, just like the biggest catalyst for the Polkadot ecosystem since 2016. Basically, it's the full realization of the vision that was laid out in the Polkadot paper. Once parachains are live, we're all going to be turning to these projects like Akala and Moonbeam to really take the reins, because that's where the growth in the Polkadot ecosystem is going to come from.
Cool. All right. One more question came in from the community. Where do you two get your news from, and how do you stay current? Maybe Garrick, macro, global crypto, and for Peter, where's the best place for people to stay current on what's going on with Polkadot?
Yeah, great question. I'm constantly adding and pruning sources. I probably subscribe to over 200 RSS feeds. Yes, I'm one of those dinosaurs who still uses RSS. Great technology, still works well. But managing that intake is challenging, to say the least. So, I think there's a few really good podcasts that are also really, really excellent out there. That's one of the best things that's happened, I think, in the crypto space over the last couple of years, is that the quality information that's being distributed via audio channels, like, I think the, Uncommon Core podcast, if you're looking for more technical discussion, Laura Shin's podcast. I mean, there's just a bunch. Nick Carter, the Castle Island podcast series. lot of options out there that are really high quality discussions, really getting you, the kind of discussions, frankly, that prior to podcasting, you had to go to business schools or, kind of be on the inside of difficult to access networks are now out there in the open. And that's one of the best things about, I think, the blockchain space is just how open it all is. But, certainly there's some good media organizations as well now in the space. The Block, I think CoinDesk, where I originally got my start in crypto all the way back in 2013, working full-time there, is still putting out a lot of good news and analysis. And of course, come check out our research and our podcast as well.
Yeah, great start on top of all that. Obviously podcasts are great. One that I would also mention that's not necessarily crypto native, but I think has emerged as maybe the best crypto podcast to come out of this last bull run that we are hopefully still in, is Odd Lots from Bloomberg. Joe and Tracy have done a couple of really great, a lot of really great crypto episodes. And then I also love just listening to them on all kinds of other stuff that's broadly current events and maybe will be important to crypto in the coming days. They've done a great supply chain series over the pandemic, which I'd highly recommend. When I listen to that, I just start thinking about all the crypto applications. So stuff like that is great. But yeah, I'm a news junkie. I come from media and politics. So Garrett, I'll have to ask you for your tech stack recommendation for RSS feeds because mine broke recently. Beyond all the crypto media, I don't actually spend much time on Reddit. Read more 4chan than I'd like to admit. Twitter Spaces and Clubhouses have been really great over the last couple months. Obviously in the pandemic, like mid-pandemic, there was no better place to get news and talk about stuff than Clubhouse. That's obviously fallen off a bit now that we have Twitter Spaces. Spend a lot of time on Twitter all day. If anyone saw my tweet deck, they would like maybe faint. There's like 25 different feeds that I'm looking at any given day, which is always interesting entertainment at the beginning or the end of the day. And then beyond that, most of the crypto media outlets have like Telegram story notification groups. So it's like announcement only, and they just list the headlines and the links. Editors will hate to hear this, but most people actually only read the headlines. So scrolling through the headlines on all the crypto media publications twice a day allows me to download as much of everything that's gone on without actually clicking in and reading too much, unless I find it particularly interesting, in which case I'll get in there.
Yeah, Nick, sorry, just one thing I want to add. Thanks for all that, Peter, is if you're curious about what we're kind of reading and listening to and watching, we publish each month at the bottom of our monthly outlook kind of links to exactly that. What are the articles, podcasts, videos even that we found of greatest interest, and not just crypto related. We try to look at things outside of crypto and economics and politics that are relevant. For example, what's happening with Taiwan and geopolitical tensions there, that certainly has a big role in U.S.-China relations, which will impact crypto. So that's a good place to go if you're interested in what's the blockchain.com team is reading and listening to.
Yeah, and CNBC on mute in the background, see them quoting Litecoin prices all day.
All right. Well, thank you both so much. Peter, Mark, fantastic views. So much going on in the Polkadot community. We're really grateful to have you come share that with us. And thanks again, Garrick. For all of you that joined us, the podcast and presentation will be available on YouTube. We'll post links on that on Twitter as well. And we thank everyone for joining us. We'll also be publishing a longer form summary, which includes all of the things we're reading on the blockchain.com blog, and would love to have everyone take a study of that. So thanks again. Have a good afternoon.
Thanks for having me.
Cheers.
Here, bye.